Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily review for Friday the 21st of the 5th, 2021. Time is 0445 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday and Thursday the 20th we had a negative unopposed driver in the dollar at minus 174, no backdoor flows. The opposing positive flows mainly went into the pound at plus 102, into the euro at plus 47, and the yen was the positive rock at plus 25. Activity plus or minus 174. Intra-week then, this is from Monday the 17th open to about 15 minutes ago. So it's the most relevant then. We've got a negative opposed driver in the dollar at minus 201, front and back door flows mainly going into the euro at plus 136, into the pound at 76, and the yen was the negative rock at minus 11. Activity plus or minus 212 for the week so far. Intraday then, this is the Asian session to about 15 minutes ago. We're looking at a positive opposed driver in the euro at plus 34. Front and back door flows mainly coming out the pound minus 28, out the yen at minus 26, and the dollar's the positive rock at plus 20. Activity plus or minus 54. Right, what's been knocking it about? Well, basically we've had positive AUD retail sales overnight, early morning. GBP tier 2 retail sales coming up. German manufacturing and service PMIs. Eurozone PMIs. GBP PMIs, manufacturing and services, and the CAD retail sales. So we've got a lot of inflation data coming out in the PMIs today to bear in mind. The other point of note, Iran's talking about racking up their oil exports in the near future. This is obviously off the back of this Biden US deal with the Iranians. The end result is oil is very soft at the moment, right? So let's have a look at the flows. Our trades have improved yet again. We were about 6,000 points in profit. We're now about 5,800. So ultimately what we're trying to do is build a solid position that we can just basically sit there and ride the volatility without having to touch it. All right then, so the euro basically is strong except against the Swiss, which is stronger. The yen is strong except against the dollar, the euro and the Swiss. The pound is strong except against the dollar, the yen and the Swiss. The Swiss is strong except against the dollar. The CAD is weak except against the AUD and the NZD. The AUD is weak across the board. The NZD is weak except against the AUD, and the dollar is strong except against the euro. Right, so what have we got? We've got AUD weakness at the moment, and variations on strength. Nobody is fully strong at the moment. So it's a mixed picture, but with AUD weakness. But bear in mind, this is just very short-term flows in the Asian session. Right, let's get rid of that and let's look at the asset classes. Start with the US dollar index as usual. So US dollar index. Right, basically it looks like this. It's broken and it's now at the floor, so it's at the lows. Gold in theory should be liking this, and gold's at 0.27 from the high, so it's not fully recovered, but it's working on it. Oil, you've got this softness in the oil. It's 0.45 from the floor. A lot of that will be due to the Iranian deal, or potential deal. Wall Street broke. It's come back, and it's about 0.22 from the high. S&P double top, similar sort of situation, 0.17 from the high. Tech, yes, tech broke, and then it's about 0.3 from the high. So tech's grinding back up there. US 10-year on the bonds, and this is the bund. So we've got this situation of it's 0.37 from the floor. So the price has bounced, yields have come up a little bit, and the bund has broken this floor but come back a little bit. So yet again, European yields significantly outgunning US yields. Excuse me. And obviously this is helpful for long euro dollars. Right, so copper, you've got this 1, 2, 3, 4, 5 pumps, which was a fair while ago now, just about remember it, and it basically came back, messed about, broke, and it's now come off. It's not 0.47 from the high. So copper's pretty weak compared to what it used to be, for whatever reasons. Right, so and the US steel. So US steel had this sell-off at the double top. It broke. It's back down to 0.4 from the high. So US steel again struggling a bit. So we'll just get rid of that and do the final analysis, and then we'll take it from there. So as I say, our trades we've had basically 2 months of pain in the neck with these trades, trying to position them forwards, backwards, forwards. If you've been following what we've been doing, you'll know how painful that's been. But we're now reasonably set in larger positions, so it's we're short USD dollar in the euro, the pound and the AUD, and we're short NZD in the euro, the pound, the CAD and the NZD. Right, so you know, it's likely you're going to see all sorts of things going on. The CAD's got this oil issue, you know, basically NZD is still sort of viewed as the go-to risk on, risk off commodity currency. The dollar's come right down. Dollar indexes, as we say, is back down at the floor. So there's going to be some people trying to bounce it up. So you're likely to see a bit of volatility there. But we're just going to stick with our positions. As I say, we've scaled. We've been scaling for 2 months. We're now about 6,000 points up, and hopefully we've got the positions set now so that they can absorb all this volatility without stops. So I hope that was useful to you. See you tomorrow for the daily briefing and the data cycle review if you can. If not, see you Monday for the daily review. Thank you very much.